What's up, guys? Robbie Greenfield here, or RobTG4, and this is your weekly market update. So this week we are not going to talk about price forecasts because they are absolutely nonsense in the context of all of the market shock that we have seen. And instead, we are going to delve deeply into three things. The first thing is that we're going to talk about the current market shock that we've experienced following the jobs report last week after the Federal Board of the United States decided not to lower interest rates. Second, we are going to go into future potential market shocks for you to be aware of and how to plan as necessary. And then thirdly, we're going to be talking about how Blackrock is benefiting from all of this and is acquiring as much ETH and as much BTC as their endless pockets can desire. And so we'll get through all of that and more. So let's get into it. First up is the market crash. So a very quick synopsis. Last week, we had the Federal Reserve Board meeting in which Chairman Powell refused to lower the interest rate. Right now, it stands at 5.5%. And his reasoning was that he wanted to see where the jobs report was going to land for the month, in which the United States had forecasted a 4.1% unemployment rate. However, 2 or 3 days later, when that report came out, actual unemployment was at 4.3%. So we were 0.2% over the forecast, which officially put the United States, by their own definition, in a recession. Now, the US tends to redefine what a recession is quite often and also fudge their labor statistics data to make sure that they can avoid it at all times while printing as much money as possible. At least that's historically accurate. However, in this case, there really was no running away from what was inevitable and what I think honestly has been a recession since COVID. And that is that a recession right now is defined as when your unemployment rate is at least 0.5% greater than the low of the last year, which right now is at 0.6% greater. So we are now finally fitting that definition. And this, of course, caused, number two, recessionary fears that wiped out about $2.9 trillion from the US stock market. Obviously, as recessionary fears loom, people want to become more liquid, have cash. They divest from a lot of the stocks, equities, commodities that they may be engaged in. And a lot of that money is first going to come from their riskier assets. And of course, digital assets, be it the Bitcoin and ETH ETF, and also cryptocurrencies more generally, do fit that category quite well. And so we saw the market take a massive tumble from around 69,000 around 7 days or so ago to $48,000 earlier yesterday on Sunday, and then today it evened out at around $55,000 of Monday this week at the time of this recording. Now, not all of this market movement was just caused by US stock market movements, which were negative, but they weren't great, right? It wasn't a Great Depression, or I would say too much of a shock in contrast to what we've seen before, like the 2008 crisis or the stock market movements that we saw during COVID. However, in Japan and Taiwan, this was not the case. We saw greater than 5 to 10% market movements as soon as Asian markets began to absorb those recessionary fears that were occurring during their weekend, right? Because this was happening Thursday, Friday in the United States in terms of the reaction to the jobs report. This is effectively doing two things. One, just worsening the overall financial situation in Japan specifically, also obviously in Taiwan, but Japan more because they've been struggling with yen inflation. And then second, specific to Japan, it's also just creating greater pressure on these carry trades that have been instituted over the last 10 years, given the disparity in interest rates between the yen and the USD. Now, remember, the yen was at around 0.1%. It was moved to 0.25%, which is still, it doesn't even make sense why they would do that. It's still way too low, against the USD, which is at 5.5%. And this carry trade, model is that people were borrowing yen at effectively a 0% interest rate, and then they were buying USD denominated assets that would earn them yield. Now, this is facilitated by FX traders and institutions alike, particularly high frequency traders like Jump Crypto, in the cryptocurrency market. And so when you see this market collapse and you see an increase in the interest rate on the yen, you start to see margin calls for all of those funds that are facilitating that type of strategy, and they need to find liquidity to then pay off their highly accruing debt, right? I mean, it's literally accruing, more than double the interest rate than it was before. And so again, just like the US stock market, when things go bad, people are going to pull from their most risky assets first, and use that liquidity to resolve whatever situations that they have. And so we saw more of that, not only in traditional financial markets, but also in crypto, right? Because a lot of those institutions do have some exposure increasingly to crypto. And that just caused prices like Bitcoin and ETH and of course alts to further decline, over the remainder of the weekend going into the work week. That's effectively, what's happened. Now, with regards to how this has affected the Bitcoin ETF, we saw about $500 million in outflows. We saw continued, very vanilla performance of the ETH ETF. And, most importantly, we've seen the VIX just freaking explode. Every time I bring up the VIX, just because it's been relatively low, I like to have a positive spin to it, right? I like to say the VIX, like that, but I can't even say it like that anymore because it has increased 109% over the last 5 days. Now, guys, remember the golden rule is that if the VIX is below 20, things are stable and good and everything is just good in the world, right? But if it is over 30, things aren't great. Things are bad. Things are volatile, as its name suggests. And so right now it is 34. At the time of recording it's 34. It went from 14 to 16 nearly 2 weeks ago to freaking 34. So we're seeing great volatility. We're seeing great trepidation in the markets. The world is not financially stable by its own metrics. And, this is a major negative factor with regards to any bullish sentiment in the crypto market. So any hopes and dreams of 100,000 at the end of this year, I really do think are going away. And this is regardless of the results of the November 24 election. I do think a Trump presidency might boost it up a little bit, but still things are not in a good place. And to add fuel to this nuclear bomb fire that we have found ourselves in, Iran is looking to retaliate against Israel. So if you did not know, Netanyahu and his folks thought it would be a great idea to take out a political leader of Hamas, which is good, but the bad part comes with they did it while the man was at the presidential inauguration in Iran, which is a terrible freaking idea. Obviously, don't need to tell you that Iran does not like Israel. Israel does not like Iran. And Iran knowingly funds both Hezbollah in Lebanon and also Hamas in Gaza. And such a provocation brings in other entities like the US, and it really does just make the Middle East conflict worse. And this not only increases geopolitical conflict, but honestly, it costs lives. And so this is something that, honestly, I'm going to be real with you. It was stupid. It was stupid for Israel to do this. It affects their economy gravely. It affects the global economy gravely. And I think, on behalf of the world, they and everyone else involved in these conflicts need to frickin' stop and find a solution that isn't just sending missiles into the air and worsening things. And you even see this in the domestic political stage of Israel, in which many people for years now have been condemning Netanyahu's performance of warmongering, and that of including the United States, as well as the many entities on the ground like terrorist organizations like Hamas, that are just really costing lives at this point. And so all of these things mixed in a stew taste like poop, makes the volatility index go up and really does, meter our expectations as to what is a good end of the year in crypto. And right now for me, I'm thinking 70,000, 75,000 at most. I don't think it's going to go above that for Bitcoin in particular. And then everything leads from there. In terms of altcoins, guys, you divest from altcoins right now. They ain't going to have their time until 2025 at best. And that is only if the Federal Reserve in the United States gets their act together with regards to understanding the economic reality in the US and lowering federal interest rates in kind to that reality. Right now, the market expectation, I believe, is around 86% that we will see a full percentage point decline in the federal interest rate before the end of the year, but certainly at least 50 bips. In the September meeting, it was only 25 bips. So that really shows you how much things have changed in the past week or so. And so that's where we're at today. That is why we've seen, such major market movements over the past 4 days, which feels like 50 years. And we'll see how things go in the future. But right now, things are not looking great because the co-founding factors that make crypto go down are now overpowering those that we thought were going to make it go up, such as a Trump presidency, such as a low volatility index, and such as high inflows into the BTC and ETH ETFs. So up next, we have future market shocks for you to be aware of. So there are three classes of creditors that have a lot of freaking BTC and crypto otherwise that can dump in the market if they feel inclined to, particularly if the broader financial situation gets worse and they just want USD-based liquidity to fall onto or to reallocate to make their overall position safer. And that is the Mt. Gox creditors, the Genesis creditors, which those two hold around $10 billion in crypto. Obviously, the vast majority of that is in Bitcoin. And then not only, but the US government, which holds about $14 billion in crypto to boot. Now, I'm not as concerned with the latter, liquidating their seized funds, namely from the Silk Road in around 2014. However, you have to know that there's about $24 billion worth of crypto market supply shock that could greatly worsen an already bad situation, not only with regards to Bitcoin's price action, but of course, all others as well. And now this may, speak volumes in terms of discounts, for everyone to cash on. But more and more, I think that most of you should divest from most of your positions, wait the market out, hopefully see, the BBWP, lessen a bit, so just overall volatility lessen, the VIX lessen, so that we can safely tread these very, very, very choppy waters. The second thing that is very, very important to note is that there have been multiple allegations that Jump Crypto has had a SEC and CFTC investigation started upon them and that they're leaving from the crypto space. Now, all of this is actually, absolutely speculative, right? But it's important to note that they have effectively converted about $315 million worth of staked ETH into USDC, which if you go, on the reports, you can see that that's their biggest position. The vast majority of their portfolio is now in USDC. There are other, sentiments that this is because they were funding their high frequency trading via borrowed yen, and then they needed to find liquidity to pay back some of that debt given the closure or worsening conditions of the carry trades that individuals are doing between the yen and the USD. Now, we can take a look at this loom here, which provides a quick overview as to what both the US government and also Jump Crypto are doing to get a better insight as to how founded some of these fears are.
All right, so let's see what the U.S. government is up to. And shout out to Arkham. Arkham is freaking ridiculous, guys. I mean, this is not even a sponsorship. They're from their UI to just being able to really indict, massive entities with their on-chain transaction activity versus whatever pandering or things they're telling the public is extremely, extremely helpful. So again, we see the U.S. government has about $11 billion worth of crypto. Now, this is greatly decreased over the course of this market, namely because we've seen massive just declines since the jobs report, and also just again the overall performance in traditional financial markets, both in the United States, Taiwan, and also Japan. But nonetheless, we know that they have around $10.74 billion Bitcoin, and then after that, their largest position is USDT, which is kind of ironic. We can also see some of their top counterparties. And again, there's some irony here, right? Binance US, are some of their biggest counterparties. Now, this can be in the context that those are some of the entities that they have had regulatory actions against, and that those transactions aren't one of necessarily natural business, but of enforcement. But still interesting to see. And then are actually exchanges on that side, but I suppose that still is a counterparty. And then some of the addresses that they actively engage with. Now, interestingly enough, we've seen some pretty large scale moves of capital by the U.S. government. If we are to take this all the way to not a million, not 10 million, not 100 million, but a billion. We see over the vast majority of their capital movements have been over the past week. We've seen a combined 1, 3, 6, 8, so over $8 billion in transfers just over the last week, versus what we've seen over the past 4 months to 2 years. It's almost equivalent, if not more so, in the past week. So a lot of market movement. Now, again, what has recently happened has triggered a lot of this movement, but it's interesting to note that the U.S. government is definitely moving a lot of crypto at once. Now, with regards to the speculation that they are going to completely dump their BTC reserves just to cause a fuss, that's absolutely stupid. I don't think there's any particular reason for that. In particular, in the context that they're going to have to hedge USD inflation anyway, and even though that correlation isn't necessarily directly established outside of obviously a strengthening BTC coming at the expense of a weakening USD, it would be pretty unwise to offload an alternative asset that has proven itself indirectly correlated with inflation rates going down, which we all know they are. So that's a quick overview as to where the U.S. government stands. You can see this information for free on Arkham Intelligence, and it's a super, super helpful, useful tool. So let's head over to Jump Trading and see what's happening there. So on the Jump Trading side, we have $398 million position. Again, $308 million of that is in USDC. If we want to, better understand who their exchanges and counterparties are, biggest, exchanges, obviously Binance and Coinbase overall. And Binance being the biggest counterparty, as well as Coinbase and OKX. So obviously these counterparties are ones that they're transacting against in the context of the high frequency trading that they do. And you see a lot of movement recently. A lot of these have been either USDC transfers or USDC conversions. And what is really interesting is if we look at what's happened in the last week, so their balance has been gradually increasing, this is no surprise when you're trying to avoid a rather volatile market. And so this is what Jump Trading is looking like. Again, they're pretty much divested from every other token other than USDC, and it doesn't necessarily need to be in the context of them leaving the crypto business. It could very much be that they were a carry trade funded high frequency trading firm, and that they needed to rethink that particular strategy, and or it could also be that they're being investigated because again their CEO has already resigned in the context of a previous investigation with the CFTC. So both things can be true. They're not mutually exclusive, but it is very interesting to see how one of what is regarded tier 1 firms within the crypto space have nearly all of their capital in a stable coin, in contrast to other tokens that you would think they would be invested in.
Last but not least, we need to talk about Blackrock. Now, BlackRock has been strategically accumulating BTC and ETH reserves like it's nobody's business. Effectively, we've seen a lot of this already, but certainly we saw it over the past week. And I want to take a look, really into the wallet of BlackRock just to show you where their positions are, when they've started accumulating, and also really to beg the question, how much of a threat is this, not necessarily to Bitcoin, but specifically to Ethereum? Because again, remember, Ethereum is a proof of stake blockchain, and how much ETH you have absolutely freaking matters. It can effectively change the overall design and functionality of the network if a coordinated actor that is accumulating hundreds of millions of dollars of ETH decides to create their own validator service, decides to make certain block changes that others would like not to have, and is one of my greatest critiques of the Ethereum network in general, is that public networks that leverage proof of stake cannot continue to be plutocratic. They need to find ways to change the algorithms in which validators are selected, so that it's not a pay-to-play type of game, because if it is, then decentralization is completely lost, because entities like BlackRock exist and effectively have won that game in every other context when it comes to every other asset that exists on this planet. So let's take a look, and we can really get into the nuts and bolts as to what BlackRock looks like today in the context of crypto.
Here we see the wallet of financial god. No, I'm playing. So this is the addresses associated with BlackRock. As you can see, as an entity, they actually hold more crypto than the US government, quite a substantial amount. And the vast majority of that position is in Bitcoin. But of course, there is a massive amount in ETH as well. So we see about 342,000 Bitcoin and 189,000 ETH. Again, in the context of POS validation, I really do think that this is a major threat to Ethereum's decentralization, but that is neither here nor there. Top counterparties are going to be Coinbase Prime and Ondo Finance, which I find it very interesting that Ondo Finance still demands a pretty high volume, even though it's obviously peanuts in the context of the hundreds of millions or billions that BlackRock has positioned in otherwise. And then of Coinbase Prime, of course, they serve institutions, so that relationship in the context, particularly of the ETH ETF and the BTC ETF, is not very surprising. Overall, they're engaging on the exchange side with Circle, FalconX, Coinbase, and then everything else is pretty much almost accidental trading volumes in the tens of thousands. So not even 1/1,000,000% of what they are facilitating across these other exchanges. Constant trading volume, not necessarily what I want to focus on right now, but what I would like to focus on is their balance history. So again, over the last week, it's been declining. I show this because even though things are going very bad in the market, it shows BlackRock's steadfastness to maintain its BTC and ETH positions, which I find really, really interesting. And then also, if we back up a little bit, their holdings on chain is another indication of how committed they are to some of the networks involved within the ecosystem. So if we want to see how much they've been accruing over the past week, to really show where they sit, we can put BTC. So we got BTC there, and over the last week, look at this acquisition. I mean, their BTC token balance has increased substantially. Right, so it shows you that during bad moments they're still acquiring. If we do the same thing with ETH, we'll see something similar. Right, this is all. Let's go to the week. Right, doing the exact same thing. Let's go to the month. Again, this started late July. Right, so this was recent, and then going into July 29th. This is the week of the jobs report, so that's last week. They continued this acquisition. So BlackRock is acquiring everybody's losses, and they're creating a very, very, very strong position, and it really just shows you that you should be long on these assets. So BTC and ETH are things that I personally hold, and I hold it for exactly this reason. Not only because the macroeconomics are in line with positive price action over the long term and medium term, right? Not necessarily today or tomorrow, but that institutions like BlackRock realize that value and typically don't make these type of moves by mistake.
Guys, that is it. Hopefully that was helpful to you. Again, don't cry too much. We're still alive, even though crypto is down. But how many times have we been in this position? It's no different. So make sure to keep safe. Make sure to limit your trades. And also make sure to reconsolidate your positions, hold USDC or USD equivalent or whichever fiat that you have exposure to, because right now it is better than losing your money in what is an increasingly volatile market. And until next time, I'll see you. Peace.